Hello everyone, welcome to the Market Outlook midweek. This is Gaurang Shah here from Geojit Financial Services. And as we begin the week for the trade this week on Monday, there was choppiness and volatility. Continued from last week's choppiness and volatility. Expect the consolidation period on the markets to extend a little bit more from here. We have a holiday tomorrow on account of 15th of August. First of all, let me wish all of you all a very happy Independence Day and hope we prosper going forward from here on and contribute to the country whatever we can. Before I go any further, let me give you certain levels on the Sensex Nifty, Bank Nifty, Rupee Dollar and Crude Oil. Absolute flat on Sensex and Nifty, 20 points uptick on Sensex and the level is 78,970. Nifty is down about 8 odd points, 24,130 is the level on Nifty spot. Bank Nifty down 90 odd points, 49,730 is the level on Bank Nifty or Nifty Bank. On Rupee Dollar equation, weakness persists on the Rupee against the dollar and the level is 83.92 rupees to a dollar and weakness of 0.05 paise. On crude oil front, whatever has been happening in the Middle East and the news flows, we've seen a correction, then a pullback on the crude oil. So Brent is trading at about $81.18 to a barrel and NYMEX is trading at about $78.89 to a barrel. So firstly on the crude oil, I think well accepted the fact that at least in the near term, for whatever happens in the Middle East, the crude oil prices are going to be vulnerable to that situation. Whether it is going to be a positive, negative, similar reaction will be seen on crude oil prices. But expect some kind of cooling off in case if the situation doesn't escalate and takes the turn for the worst. On the rupee dollar equation, I think there have been interventions by dollar supply to stall the weakness in the rupee against the dollar. But the news flows and the uncertainty has kept rupee vulnerable on weaker side to the dollar compared to any kind of strength. 84.05 on the weakness and 83.90, 83.85 would be the strength on the rupee against the dollar. This is probably a near-term view on rupee, dollar and crude oil. Coming to the markets, so news flows were aplenty. I'm sure all of us are aware about it. And that has continued and given the kind of recovery that we saw from post-budget levels up until the recent time, that rally was in itself to be seen and witnessed for all of us, and after that a consolidation and range bound movement with a negative bias. So this consolidation and profit booking is likely to stay. Tomorrow, of course, we have an holiday on account of 15th of August, so it's going to be a short week. But on the earnings front, which is going to be curtains down this week for first quarter earning this financial year FY25, well, to sum it up, there have been certain pockets of weaknesses, but those numbers are not all that deep down on the negative side, which can possibly make us conclude that the earnings season was nothing in terms of excitement. There were excitement as well. So it was more of expectation of next quarterly earnings trying to be better than what we've seen. In terms of the consolidation level on the Nifty spot, if you will, on the lower side, 23,900 to 24,100. This is the lower level on the Nifty spot I'm talking about. And on the higher side, 24,400 to 24,500. And broadly speaking, friends, since the last maybe about week to 10 days, we have broken 24,000 and then we've recovered. Hence, and on the higher side, we've seen headwinds in terms of 24,400 to 24,500. So that's going to be the broad range. But having said that, there are plenty of opportunities to be made in terms of investment ideas. And as always, every week when we interact with you all, we share two investment ideas. The first one is Jyoti Laboratories. In fact, both of them are from the FMCG pack, if you will, today, the investment ideas. This is traditionally a South-based company, but has managed to expand its geography in terms of business opportunity to the rest of the India. And with consistent R&D focus, they have been able to launch newer products as well. And some of its products are known to be power brands in the market and with great brand loyalty. So the first one is Jyoti Laboratories, and we have in fact increased our price targets, seeing the earnings for Jyoti Laboratories for first quarter this financial year. The second one also is a stock which we would have possibly recommended earlier, but post the earnings, we have increased the target price for this as well, and this one is Dabur. Remember, friends, there was uncertainty when the situation in Bangladesh erupted for all the wrong reasons, and Dabur has one of its focus area in terms of Bangladesh, but situation is now coming back to normalcy, and what the statement is also that from the company that we could possibly turn to normalcy sooner rather than later, but not giving too much of focus over there. Even the domestic business and minus India, the business for Dabur has been growing at a steady run rate. They've got a huge range of products in terms of herbal and Ayurveda to offer, and with focused R&D, they are launching more products. Good market for Dabur is semi-urban and rural India, and of course, metros, tier 2, tier 3 cities also remains to be a very strong market for Dabur. Expect the earnings to improve going forward from here on. But remember one thing, friends, these two investment ideas, that is Jyoti Laboratories and Dabur, are on the fundamental side, so you need to have a longest time horizon. These are not BTST or STBT ideas. Start nibbling at current levels given the consolidation period and profit booking kind of time, at least in the near term. Start at current levels, then as and when you get opportunity at lower levels, you can continue to add to the stock. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please take care of your health. Bye-bye.